Hey everyone, just wanted to do a quick video on profit versus cash flow and taxes. So what we've got here is a little example. So we've got, there's money in a bank account of $5,000, and what we're just going to go through is just the ins and outs and what we need to do, what taxes you need to pay at the end of that. So you've got in of 20 grand and GST on that comes to just over 2.5, okay? Then we've got all of the outs, the money that goes out. So we've got purchases and there's GST on that of 652, and we've got wages going out, loan payments and drawings. So if we take this 5 grand, we add in the 20 and we take off all of the outs, then you're left with cash of only $1,000. So what we haven't taken into account is the tax that you need to pay in that. So we'll start with GST. So we've got the GST on the sales and the GST on the purchases is the only things that have GST in this scenario. So we take the purchases off the sales and we've got GST of 1956. To the wages, so let's just say that it's $1,500 PAYE that you need to pay. Then we need to take into account the tax on the profit. So to work out your profit, you've got to have your sales less your GST, then less your purchases, less GST, and take off the wages. Now, in this scenario, these are the only 3 things that will affect your profit line, okay? So after taking those things off, you're left with a profit of $7,000. So with that profit, you need to pay income tax. Let's just say that it's a company and we're keeping it all in the company. It's not being shared to shareholders. So you're going to be paying income tax of 1972. So all of these taxes together come to 5.5 grand, but you've only got cash of $1,000. So you need to look at what the things that you can change. And the biggest one here is your drawings. That basically you could be taking too much drawings to be able to cover all of your taxes. So get a good budget, talk to your accountant, and hopefully we can help you. Thanks.